I'm watching the market on my main screen, but I think I'm going to just go over here to my contextual analysis screen and we'll do the recap portion of our show. Everyone here has been here before, so I won't go into the big introduction. I will just do the first half. What happened this week? Well, look at the TPO views across the top. We just finished cleaning up some of the myriad single prints we have on ES. And, it's very sloppy. We broke out of the range and then left a lot of garbage, which we're now cleaning up. We came back down into it. Really predictable activity there. Mayem's doing exactly the same thing. I mean, it looks almost perfectly similar. RTY was leading today, oddly, and it's holding at its highs. So, it still remains to be seen if that's just rebound from the bank crash or if, there's truly people risk on in small caps. But, again, there's a lot of money that has no place to go. So it could be that. You never know. So at the moment, as far as this week, I wanted to share a couple of other things that are interesting here. I like to watch these weekly VWAPs. And here's what that looks like for ES real fast. Stretch it out so you guys can see all of it. Okay, so this basically shows me last week and this week and the VWAPs for each of the weeks. And so basically all we just did when we shot up earlier today was test SD4 of last week. And then we traded right back and, we're kind of in the extended range of last week. And this kind of just gives me another sense of where extremes are. I do the same thing looking at the daily VWAP standard deviations. I share this to you guys all the time. And, today we got up to SD2 and we made it almost SD3 here in ES and NQ. And those are the two that were the weakest also. And, so I just like to look at this to kind of put that into context. And, again, good scalping, which is what I do, is mostly about the most recent range. And this helps me understand what that looks like and when we're, actually leaving it or not. And NQ looks almost identical, like I said, whereas our RTYs is a little stronger. So, my take on this is we had a lot of news this week. We had FOMC minutes, so enough stuff that could have really pushed us one direction or the other. But guess what? It really didn't. We're at the top of the recent range yet again, and I keep saying this at IDE sessions, but there's two things that matter right now in this set of market conditions. The first one is, whoa, we just had a big Canoodle sweep down there. The first thing that matters is the range extremes, and the second thing that matters is the momentum. And literally nothing else is really going to help you. You can pick artifacts, and there's all kinds of them to choose from and help decide where you want to play. But no matter what you're doing, you have to respect, first of all, the momentum, because it's changing very quickly and we're getting, really high momentum moves in, both directions. So you got to respect that, because that'll blow through through any system or any indicator or any tool or any order flow. Momentum is always king when we have it in the short term. And then, what the momentum's doing is it's pulling us to range extremes, which is setting up really good extremes. And so that combination is making a really good trading environment, particularly for scalping. So, I've said that a few times. And if you then take that thinking and then incorporate your structural view around it, structure is great too, particularly if you're looking for bigger moves, but you've got to respect the short-term momentum because a lot of people are getting run over. I was playing around in some evals this morning. I got run over in one. I don't know if David is here. Yeah, he is. David and I were working and we blew a 150, the first chunk of a 150 bundle. And, all I was doing was, hey, basically you have a lot of leverage. So under certain conditions, you should try to use it, but not just randomly. And guess what? That's the topic for the second half of the session. So the other thing I wanted to show you guys, I'm going to switch over to my main screen because I think there might be a trade forming over there. And while I'm talking about that, hang on, I'm going to do two things at once here. Okay, so the other thing that is at least worth being aware of is you guys know I always watch the internals, and right now, if you look at what's going on, we had good report from J.P. Morgan. Actually, all the banks reported this morning, and the reports were all good. But tech is weak, and so this is there's no financial in the Nasdaq. It is in the Dow, and it is in the S&P 500. So that's why they were both a little bit crazy because J.P. Morgan was a decent chunk of that. So that's also noteworthy. Again, not so much in predicting the future, but it's noteworthy as always in, as we see how that gets priced in going into the close and into next week. I think we could get a really interesting close just because we had, I'm still on this monitor, aren't I? Let's see. Yeah. So, just look where we are, with respect to VWAPs. The ES right now is trading at 54 and the VWAP's up at 67. And it hasn't been really trending. It went up and then it took a hard turn and went down. And, now it's kind of ebb and flow at the low, a little bit of weakness, but, this might set up a really good close, particularly on a Friday. Again, be careful fading Fridays. If you listen to PAX, you never fade Fridays. And there's an argument not to. We often get short squeezes. So I'm seeing good little long scalps over on the lows here, but you got to try it after the low gets just ripped like it just did there. I just put one on over an NQ when that happened. And I'm going to finish that and then we'll continue and talk about the psychology part for part two. So let me just put a couple of targets up with this trade while I switch screens. And okay, where's my stop share? And share screen. We want that one. Okay, so let me just, while my screen's coming up, I'll just finish this trade off. I'm just nibbling long down here on this big hard drop down here, and I'm doing it in one of those bundle accounts, one of the aforementioned Lilu bundles. So it's kind of fun, being able to give it a lot of room and just, be really aggressive. So that's kind of what I'm doing. So anyway, let me talk to this this topic too. As soon as this trade's over, there we go. Boom, we got 5 left. Let's protect those. See if we can catch a little runner. There we go. Ooh, this is a really nice runner. I'm long from 2 and we're trading at 12. So, okay, cool. So that was fun. All right. So let me go into part 2. There's not a lot to say else. I keep repeating the same thing in the part 1s every week, and that's not because it never changes. It's just because it's been a remarkably consistent environment it remains event driven. And, the volume's coming in at the extremes and the momentum is king. We've seen that just over and over and over. So that isn't the way it is all the time. In fact, often it's not like that, but that's this kind of jittery risk off environment with capital on the sideline that is looking for places to go. So that's what's causing that. And I think it's actually really readable. Whether it's tradable all the time is a different conversation because it often isn't. But, some days, yesterday was really tradable. Today has been really difficult. Like I said, I blew up one of the bundles earlier, just trying to be really aggressive. I did the exact same thing yesterday, and it worked out really well. And so that's just typical, and that's why you do that. You practice different conditions. So let's move into the topic. And the topic is this. And I know there's been a lot of conversation around this. I know there was a dojo about it. I purposely didn't listen to it because I didn't want it to color my thoughts. I wanted to just give you my thoughts on this overall. And this is completely green. I have not listened to any of the other conversation. So I just want to make that really clear. But I suspect from what I heard before that all started that some of this is going to be on the same page with some other people. And some of it may not be. And that's the beauty of trading. So here's the story from my point of view. If you had asked me about trading, how do you trade an eval versus a funded account, quote unquote, let's call it that, and real cash. If you had asked me that question 2 or 3 years ago, I would have had a very different answer than I have right now. The answer I have right now is completely 180 degrees different. What I would have told you is that cash is cash, and you have to trade real money with appropriate risk. And sometimes, that looks different for different people, but it's nothing like the risk management that you're forced to use with a trailing drawdown. There's a lot more room in discretionary trading with real money. But if you don't know what you're doing, you can lose a lot of money quickly, obviously, which is why they do the whole trailing drawdown thing. Also, because that's how they make money, right? So again, if you had asked me this a few years ago, I would have said, well, your purpose in an evaluation is to pass the evaluation. And I haven't changed that opinion. So, when they're on sale, load up on them, trade them really aggressively because, there's no rules really except the trailing drawdown. So get past it and then get to funded. But if you'd asked me this question even 9 months ago, then what do? I would have told you these exact words. I said them in a lot of sessions. Protect the funded account. By the way, if I see a good setup while I'm chatting here, I'm going to take it. This isn't a particularly good one right here, but it might be in a second if that bottom gets flushed out again. So anyway, so that's what I would have told you. Well, treat the funded account like a real money account. Protect it, but be mindful of the trailing drawdown because you can't treat it like real money from that point of view. You have to be really risk averse until you get above the safety net thing that they all have in various forms that are all slightly different. But it's all the same idea, to get you to the point where anything you're withdrawing is your profit and they have no risk. That's really what they're trying to do. They tell you they're protecting you, right? So then all of a sudden this world of $20 evals came along and 90% off and bundles and $150 lifetime funded account fees, and that changed the game completely from my point of view. Now what it's about is real simple. The game became really simple. I no longer, I'll still tell you to pass an eval any way you can. Try not to be a monkey, but, if you can pass an eval with a YOLO, then do it. And, if you have a bundle, you can YOLO 4 times. And then the last one you can take seriously. You can do it a million different. That's what I was doing with David this morning. It's like having some fun because I was fried from, a long week of really good trading with real money, so sometimes you have to play. And that's exactly what I told David, buy one of those and play if you feel burned out, which he was saying he did. So anyway, here's what's totally different now, again, because your cost of entry is so low that you can treat the entire quote unquote funded space like a big game. And that's what I'm doing. I'm looking at what are the most cost-effective ways to get money out of those the fastest, because number one, it's not going to be like this forever. It's competitive right now with a couple of well-funded players, and they're pushing, the cost as low as possible. You need to take advantage of this while it's happening. And, basically what you're doing, let's use a 50K just as an example. What you're doing when let's say you buy a $20, eval or bundle of evals, at Lila, which is such a great deal right now. You got to be trying those because it's 4 free resets. Basically, it makes no sense not to try it, even if you have accounts, as long as you're not over the limit. That's my case. I just added a brand new Lilu funded from doing that in 5 days, and I totally YOLO'd it because I could, right? And, again, you got to do it at the right spot, though. Yeah, and you got to be careful of developing bad habits. But again, that's if you're still trying to learn an edge, Donnie. If you're in like my boat where it's what's the lowest cost, most leverage effective way to manage risk to take advantage of what this is, yeah, I could have a bad habit here and there. But again, one of the things you hear me tell people all the time also is that you have to play now and then. And this is a really good way to play because it has a reward. But if you develop bad habits from this, that's your fault. That's not the exercise. Think of it as another drill. You're doing the evaluation funded account drill. Your objective in the evaluation is to get funded. Your objective in the funded is to get to withdrawal as fast as you can or as predictably as you can. And then when you're there, start taking profits out because that's why you're there. And that also pays your expenses if you haven't gotten there. And also if that particular evaluator blows up, you've pulled your money out. So, you don't want to stay with them forever. But if you can just keep cycling through those, look at it this way, Donnie, I just did a 50. So basically it was a $20 eval. It was one of those deals or $18, whatever they were. I did it in 5 days. I paid the $150 one-time fee. So I have another $2,500 of money in the market and it cost me $180. That's how you have to look at it. And yeah, I can really try to adhere to the rules and try to keep that account funded forever. Or I can look at it and say, well, I don't want to blow it up. But if I do, under some conditions, it might be worth taking the risk of blowing it up simply because it didn't cost me that much to get in the first place. Now, if you're in the boat where just getting funded in the first place is a big push for you, then obviously this doesn't make any sense at all. But if you're one of the people, and we have quite a few in TRG, that have been funded a bunch of times, maybe they blew them up, maybe they didn't. If you switch your thinking, and this is my view, for the purpose of the funded accounts with this market, and I'm going to nibble down here long again while we're talking. For the purpose of that quote unquote funded account space, it's almost silly not to try to push it pretty hard. And why not? Because your barrier to entry is so low, you can keep coming back. It's like, the example I like to use, it's not like Formula One racing where, well, if you crash, you just reset and start over. That's really expensive and you could kill yourself. But it's a lot like rebuying into a poker tournament for those of you that have played poker, at a semi-professional level where you can win real money. A tournament might have X amount of dollars to buy into the tournament, and you can rebuy in if you get busted out. So, during the rebuy period, assuming you can afford it, it makes sense to keep pushing and trying to, get big wins, even if you don't have a great hand, if you can, push your way or bluff your way or, bully somebody out of a hand. It makes sense because the worst case scenario is priced in. But later on in the tournament, when you can't buy back in and big money's at stake, it's a whole different ballgame. By the way, I'm just trailing this up here and just took profits on that little long. Again, I'm just buying exhausted lows and scalping off of them these are blocks of 5 micros. This is what I've been doing in my evals. I just passed the 50 doing this way. Anyway, so back to that. So I think the proper thing is a balance of respecting the risk, but understand you're buying $2,500 for $180, which means, you can take a lot more risk with it if you have the skill. If you can't, then it's just the barrier to trading futures has just gotten much lower for you. And hallelujah, for new people, that's wonderful because you're likely to blow accounts up for a while. But if you have a reasonable edge, I really think it makes some sense to think about this from the point of view of, just pure risk reward on an account by account basis, because you really have nothing to lose. And on that basis, I've been scaling up. I've been posting my results, and it's been really productive to do that because if you get aggressive at the right spots and you're not just, fooling around or burning through the first 3 of a bundle or whatever, but if you do it with some methodical consistency, which is doable again when you're not playing around, assuming you have a legitimate edge, then why not on a good puncture of the low put on 150 if that's the max I can put on, assuming I can admit I'm wrong fast enough. Why not take advantage? Because the worst thing that could happen isn't I lose $2,500. The worst thing that could happen is I lose $180 trading with an effective $2,500 of leverage, which in the futures market is effectively, a couple of $100,000 in reality. So it's a way to multiply leverage that we never had before, and it really takes thinking about. And you have to think about it differently. Now, again, if you're new, it's just a cheap way to get to, earning money consistently. You can't really think of it this way yet because you're just not there. But once you get through the first phase and, you can do a couple withdrawals and you're saying, okay, how do I grow? Well, that's what I'm talking about. The way you grow is you use these things for leverage instead of, the old story used to be, well, you trade in the evaluators till you're funded, and then you're funded till you withdraw, and then you put that money in your cash account and you trade it there. And I have a simple response to that now. Anybody answer this for me? Why? Why would you do that? Why wouldn't you just pull that money out and use it to fund more of these at multiple providers of this while this is happening? Why wouldn't you do that? I can't come up with an argument against that. So tell me what I'm missing if I'm missing something. Okay, so Donnie said, I got that. If it weren't for the 80% Apex, I'm pretty sure I wouldn't have gotten involved. Well, there's the whole point, is that's lowering the cost, Donnie. That's what's making it such a perfect opportunity, is they're discounting it because they're in competition. We don't care. we're basically getting this at their cost, and they're assuming most people blow up. But if you actually can manage your account, if you're capable of trading cash, then come into this with the idea, I'm just putting extraordinary leverage on my cash, and I can take big risks. The catastrophic risk is just the cost of entry, and I can come back in 5 days and enter again. And that's a really powerful thing for new people. So my Dino point of view on this today, and my point of view in general, but I think this is a really important point. And I'm not just hawking the evaluators. As long as they're giving this crap away, we should all be taking the best advantage of it that we're capable of. And for everybody, that's different. Don't just go out and load up with 20 evals. If you're still learning how to trade, different ball game. But I just missed another entry down here. Let's see if we can catch another push down. Okay. Give me a second for this, and then we'll talk some more. I'm just going to kind of have some fun with this while we're talking, and you guys can watch me fade this low, which is what I'm doing. And it'll probably blow through it. I'm hoping it does, and I can get a lot more of these further down. But if I don't, I can take some quick profits going the other way, and then maybe catch a runner going back up like this. And there it goes, just like that. You can trade really relaxed when you're trading in these, particularly in these bundles, because again, like I said, I blew one up in this group with David, and now this one is $1,000 away from being funded. So I've been having fun and being pretty aggressive. I've been up to 150 contracts, micros if I wanted to, but mostly just doing what I'm doing here and picking off, $200-300 at a time with 15 or 20, and it's really relaxed. And so there's a big argument for that, particularly for new people, because it takes the, oh my God, it's real money away. Now, the flip side of that, Donnie, is correct. It could instill bad habits in people who don't have that, oh my God, it's real money instinct. But for the moment, as long as this environment exists, you should optimize what you're doing in this environment. And in this environment, the way to go is to treat these strictly based on the cost of entry and the return on the investment. And that can tell you whether to cash them out at the end or to try to keep them going. Certainly you want to take them to the 25,000 without a split level. And then after that, maybe just dump that one and start another one. There's a million different things you can do, but it really takes the, oh my God, it's real money out of the equation if you let it. But again, I want to be clear. If you're doing that and you don't really have an edge, then you probably will have 50-50 results over time. You probably won't, be able to get and keep them funded. But if you can develop a methodology that takes advantage of this, and, I'm a scalper, so I'm always trumpeting scalping, but in my point of view, scalping is the best for this because you're dealing with taking small winners, small losers, getting in and out quickly, So I think that's ideal for these evals. But, certainly any strategy is legitimate if you can manage the drawdown. That's the only thing that works against you. And I think if nothing else, for those of you that are still learning, buying a bundle and just playing with it, I mean, not monkeying it, but, go through it and say, okay, I'm going to test this approach and this strategy, and that's all I'm going to do, and I'm going to be really disciplined with it. So you basically got 5 resets for the price of nothing. And I think that, particularly when you're new, is really, it's like permission to fail. You can fail 4 times and still not even screw it up. And I think this is the last point I want to make here as we go into the bottom of the hour, and then we'll discuss or ask questions. One of the things that new people often don't give themselves are those 2 things: permission to fail, and they don't forgive themselves when they screw up. And this is a brutally difficult psychological point of view. In other words, from a psychology point of view, this is a really hard business to be in. You're going to get to know yourself really well. And, because the only person involved is you can't, survive on bullshit because it's your own bullshit. You have to get really good at, calling yourself on your own bullshit. And that's why, coaches in a group are useful. You're teaching yourself to understand yourself. Here we go again. Let's see if we can blow this low. So anyway, my point is, if you can't forgive yourself easily, it's going to be really hard to survive. You're going to beat yourself up a lot. particularly if there's, people near to you, family, friends, husbands, wives, whatever, that are kind of watching what you're doing or aware of what you're doing. That makes it even harder from that point of view. So you have to learn to forgive yourself. No, you're going to make mistakes. I still do all the time. And that's the first thing that I learned. And, and then the other thing is, you gotta go the other direction too. And so I think give yourself permission to fail, forgive yourself when you do, but every now and then you have to play. I was just telling David this. Give yourself permission to play, and you have to do it every now and then. If you don't do it, you're going to just rip yourself up. This emotionally can be really hard. And, playing away from trading is a really good idea, your sports or hobbies or whatever, but you also have to play within the trading environment, in a sim or in evals. Give yourself room to explore. You'll find new ideas that way too. Sometimes you find instruments you like better or whatever. So that's my comments about the evals versus the funded. And I think it's really changed. With respect to cash, I still believe, like I did before, you have to, have a good model and be comfortable with the amount of risk you're taking in your real money cash accounts. And then you just have to let it ride. And sometimes, you're going to have drawdowns and it's going to be real money and that's going to hurt. And that's where you really have to use all of your tools. But, there's really not a good reason to do that right now. I'm copying my funded accounts to some of my cash accounts sometime when there's really good conditions and I can, put some more money in my cash accounts. But boy, a lot, being really aggressive in my cash accounts makes no sense when I can, take virtually no risk. For every $2,500 of risk, I have to spend $180. My God, I'll take that deal any day. I'll keep taking that deal. So anyway, I think that's kind of my thoughts on the topic. Okay. Yes, agree with all of those things. Absolutely, David. And that's important. It's important to practice when there's skin in the game, even if it's just passing an eval, or even if it's just the $32 you spent on the bundle or whatever. That's enough skin that it should get your attention. And particularly if the payoff is that good, you're basically spending the $36 or whatever the number is, and you have a really good chance of getting $2,500 of drawdown for $150 by spending that $30 or whatever, and being disciplined over 5 accounts. I got to give Lilu credit. This was a clever thing to go against Apex, because it's complicated to administer. And the first couple of ones I did, I was like, my God, on Rhythmic there's like rows of accounts. But it's hard to see in Jigsaw too, because when you hit the drop downs, there's like, which one is it? I mean, look at that. It's just craziness. Now I'm going to take this one off the one it was on, which I don't want to do. Oh, well, let's see. Just click away. That should leave it there. I better double check that. Anyway, so let's see. 32. Yeah, I think that's the one I was in. This is one of the bundles. Yes, that's the one I was in. Anyway, so I think, this is a really cool thing. And, you guys know I love the evals anyway, but when you can get, not just, it used to be, we used to say, God, you can buy an eval for $30 and you can get a chance at $150 one-time fee and get $2,500 worth of drawdown. Well, now you get 5 tries at the same price. You're basically buying, a lottery ticket. And if you need to practice, this is the way to do it. So, obviously my opinion is really clear. I think it's a really good idea. I think that the downside that Donnie raised is legitimate, but I think it's less significant than the potential upside, which is always how you should look at every endeavor with trading or anything else. One other thing, where are we? 03. Okay. One other thing, I got to just repeat this to you. Some of the people that have been around my live sessions this week have heard this. I'm doing this drill where I trade long and short at the same time in 2 different accounts, 2 different bundles. And it's really a good drill because, the only rule really is, once I put a position on one, I need to hedge it on the other. I don't really need to do it 1-to-1 though, so if I really like it long, but, like this morning I got run over on a long, I want to make sure I have a short on the other side. So, one of the accounts is making money if the other is losing. And again, I'm just, playing the game, taking advantage of the bundles and one bundle against another bundle. And I really find this helps me focus on the price action, even if I really only want to trade one way. it makes me automatically skeptical of, like, over here I'm trading long and over here I'm trading short. So, as soon as I get a long fill, like if I get filled down here, my next thing is to go over here and look at it and say, is this a short setup? And I'm looking at it saying, no, it's a really shitty short setup. So that reinforces the idea that I might even like this even there, So it helps me get good at making decisions quickly based on one set of factors, because it's forcing me to think both ways at the same time. And fill. I'm right there. Look at this again. One tick I'm missing by. Come on. Jeez. Don't want to chase it that far. Oh, that's too funny. Again, I missed that by one tick. I reset the dome, and I was gonna chase it up to one, but now it's too far away. So that's too funny. That we need to make a highlight reel of every time that's happened to me. Thousands of times I've missed by a tick. Anyway, so this is the fun drill. So then you'd kind of go over here and you'd say, well, let's short it over here if we're trying to buy it, particularly if that had been filled. Then on the pop up, I'd short here, maybe try to get short at 20, it might have a better entry there. So I try to manage a short trade and manage a long trade at the same time. Okay, that time I chased it a bit and got it. Let's just throw a target up, and then I'll kind of show you what I mean. This isn't totally part of Dino, but there we go. The other one got filled. So now I need a bounce to short this over here and try to protect my long, and I can put long targets up. So let's see here. So up at about 0, I'm going to put a short on. Okay, now we have a profitable short and a profitable long. Is that cool or what? Okay, we took profits on this one. And now this one's really profitable, so now we can protect it. I got to tell you, this is the best drill I've ever done. And I just invented, I don't know anyone else ever did. I invented it about a week ago when I was by accident, because I was trying to trade 2 accounts. I thought, wait a minute, I should do that at the same time just for practice. And it's been, I don't get aha moments for new stuff very often. I got to tell you guys, that's one of them. That's an aha moment for somebody at my level. It's just a really powerful exercise. So cool. Thank you, Michael. Appreciate the feedback. Okay, so let's see. I think that's everything we wanted to talk about. So are there any other questions or comments about any of this? I'm tempted to buy long again here. It's getting absorbed pretty heavily. Let's do that. See if we can catch a little pop back up before we leave our session here. It's really rare that the market would make a significant new low this time of day, although we have a little bit of bad news coming in, which could be doing it, anytime. But this ought to be pretty scalpable long, at least for a bite. It may not get very far, and it could also push down. It could take 90 out here, and that would set up a better trade. So the Dino thing is kind of wrapping up, but I'm going to go ahead and finish this trade, and you're welcome to stick around while I do. Let's get that. Oh, I just missed again getting that first chunk off there. I'm going to watch it over here. I'm not going to put the other one on over here because I don't think I'm going to be in this that long. Let's see, right there, 10:30. There we go. And there it is. Now let's protect it again. See if, this will be a nice runner. $150. 200. I'll take it. Come on, go. Short squeeze, go. Okay, we could go all the way to the other end of the range if this can get going. I'm in a good spot. I'm long from 94 and it's trading at 4. So we got 10 points. That's usually the extent of a bounce. So this is why I'm protecting it tight. And again, this isn't part of Dino. I'm just showing you a trade because I saw an opportunity here. It's turning out to be a wicked good long here, isn't it? Now we're at 6. And I'm still protecting it pretty tight, so I might get caught. There we go. All right, that was fun. All right, so anyway, and that's an example of what I was talking about. Give yourself permission to have a little fun, and if you can make money doing it and have a tangible objective of some sort of skin in the game, passing an eval or whatever, then by all means. So. Okay, thank you, Maria. All right. And again, I did want to say, Maria, you came in a little bit after I said this, I think. I said this a few minutes out before we started, or right around the beginning, that my opinions, this was going to be strictly my opinions on this topic. And I know that there's other opinions out there. And I purposely didn't listen to the dojo conversation, or Lee had talked about this a little bit. I wanted you guys just to hear my opinion. So That'll help clarify this a little bit. This is my opinion, and it may be very contradictory to some other ones. And I'm not saying it's right and wrong. I'm just saying, this is a really good environment to use a return on investment kind of approach, in my view. I'm not always right, though. So, all right. What other comments, questions do we have? Mr. Jivis, is there anything you want to add?
Nothing from me. Good stuff. Thank you.
All right, cool. All right, well, this is turning out to be kind of a long day. I had a couple of private sessions this morning, and so by all means, join us for the close. However, I'm going to try to nap between now and then because I think we could have a really good close. I will leave you with this last thing. We're getting reasonably far away from the VWAP that it's getting more and more interesting for the closing setup. Right now the VWAP's at 66 and we're at 47. So, call it 20 points. And you guys know if it's 30 or more, I get interested, particularly when it's to the downside. I got to buy this again. Because when it's to the downside, the chance for a short squeeze on Friday is massive. They're just really common. We do get trend down Fridays, but they're less common. So here we just got another little zip off the low here. So let's take profits, another $100. We'll protect that last one and see if we can catch another runner. Nope. Okay. Anyway, so just keep that in mind, as you watch the rest of the action today. And if you join us for the closing session. Thank you, everybody. I appreciate the feedback, and I will see you for the close.